All right, let's talk about Bitcoin. The price has been in an absolute free fall, right? And everywhere you look, the word is panic. But what if that's just a smokescreen? What if the real story, the one that data is actually telling us, is playing out just beneath the surface? Well, today, we're going to dive deep and find out what's really going on.
So the headlines are definitely screaming panic. And yeah, the price action has been brutal. But the big question we're tackling today is this: is there a completely different story developing here? One that points not to widespread fear, but maybe, just maybe, to a calculated opportunity.
And this quote just captures the mood perfectly, doesn't it? After a drop this big, there's this deep sense of exhaustion, of pessimism, that has just gripped the market. It really feels like the selling is never going to end. And that's a powerful, overwhelming feeling for any investor to deal with.
Okay, but to really get what's happening, we have to ask a super important question. What actually caused this 50% plunge in the first place? Was it really a fundamental shift in what people believe about Bitcoin, or was something else entirely at play?
Well, the theory goes that this wasn't a crisis of faith at all. Instead, it was a liquidity crisis, and a very specific one at that. It looks like a particular group of software companies got into trouble, lost access to their usual financing, and basically had to sell off their Bitcoin holdings at any price just to get their hands on cash.
And this slide right here highlights the huge difference. On one side, you've got a technical event, a forced, localized fire sale. But on the other, you have what's called distribution, which is a fundamental shift in market belief. The argument is that what we just saw was that first thing, a technical event, and that the so-called strong hands, the more experienced investors, actually used it as a big buying opportunity.
Now, the evidence for this whole forced selling theory isn't just in the Bitcoin charts. Believe it or not, we can find a pretty major clue in the weird behavior of one very specific stock.
And that company is MicroStrategy, ticker MSTR. Now, because they hold so much Bitcoin, their stock usually just moves along with Bitcoin itself, kind of like a proxy. But right now, it's telling a totally unique story of its own. So what's this number? It's around 9%. And what that means is, right now, MicroStrategy's stock is trading at a 9% discount to the actual market value of the Bitcoin it holds. I mean, think about that for a second. The market is so spooked that it's valuing this company at less than the sum of its parts. This gap, this isn't just a number, it's a direct measurement of pure, raw fear in the market.
And that fear, it has shown up in a pretty historic way. MicroStrategy is now the single most shorted stock in the entire world. An absolutely unprecedented number of bets have been placed that this stock's price is going to go down. But here's the kicker. Who exactly is making all of those bets?
This is where the plot really twists, because it looks like the most sophisticated investors, the smart money as they say, they've already made their move and left the building. And this timeline, it just perfectly shows the swap that seems to have happened. So go back to early November. You had the strong hands, the sophisticated pros, opening up these big short positions. Then, for a bit, the stock just kind of traded sideways, right? Didn't do much. Well, that was their signal. They were quietly closing out those shorts and taking their profits off the table. So what does that mean? It means the record number of shorts we're seeing right now, they're being held by a totally different crowd. These are the weak hands. The folks who are jumping in late, driven by panic, well after the smart money has already cashed out.
So now you have this massive imbalance, with a record number of panic short sellers all crowded on one side of the boat, and that creates a highly volatile situation. It pretty much sets the stage for a potentially rapid and very powerful price reversal.
And that reversal is what we call a short squeeze. It's a really powerful chain reaction. See, as the price starts to tick up, those short sellers start losing money fast. To stop the bleeding, they're forced to buy back the stock. But that very buying action is what pushes the price up even further and even faster, creating this explosive feedback loop. And the data suggests the fuse for exactly this scenario may have already been lit.
The analysis even points to some specific price levels to watch for MSTR. If it moves above 153, that could be the first trigger, a signal that the recent breakdown was actually a trap. But a move above 166, well, that could cause a full-blown traffic jam of short sellers all scrambling for the exits at the exact same time.
So let's just put all the pieces together, right? We have a crash that was likely caused by forced selling, not widespread fear. We have strong hands apparently buying that dip, and now we have the weak hands who are overextended and dangerously short. All of this leaves us with one final, pretty provocative question. Could this perfect storm of factors be the very signal that a major market bottom is in?